I think talking about the point of where you set expectations, or wanting to have an expectation of where the investment is going to go. So whether it's growth, whether it's for growth, whether it's for income, I think that ties back to the fund model, right? How as even my funds as well, we have to set expectations. See how many percent we're going to grow, or what's our return rate like. How are your funds structured? I think let's get back to
All
the
right.
funds point. Yeah, how are your funds structured? Structured, is it open ended? I think like Bridger talked the other day, explained a bit more of the open funds and open structure and the closed structure. So how are your funds going to be? I mean, if it's not launched yet, how do you plan on launching it? Open structure or closed structure?
Yeah, right. So our fund right now is an open-ended fund. So
Yeah,
it's ongoing. We're constantly bringing on capital right now.
right.
And so also we've identified avenues as well where people who don't qualify for our fund, because we have to, of course, go through different regulations, right?
Yeah,
And so we have to adhere to those regulations. However, there are additional ways and avenues we've identified too for people to still provide them with returns, right? And that's through working alongside our general partner.
right.
And so
Exactly.
so therefore, that allows us to still communicate with just about anybody and still be able to help them. And that's our biggest thing, is that we want to be able to help. And so we have an open-ended fund right now. And so therefore, hey, you can come in. We have liquidity on it.
Right.
You know, Opportunities. Hey, give us 30 days, right? If you need
Yeah,
some
yeah.
liquidity that way, things of
Basically,
nature,
yeah,
right? We have some structure that way. Uh, but also at the same time, we have a lot of transparency, and that's what we're built upon.
right.
Sometimes in hedge funds, there's an issue with transparency and showcase. I'm
That's
like,
true. Yeah,
we're an open book,
yeah,
right? Because if we're gonna make our mark, right,
yeah,
we want to do it with character, with integrity, but also do things a little differently. Like, hey, you know
yeah.
what? Guess what? We're open book. Here are our books. Here are our numbers. Here's everything. All right. Here are
Yeah, I think,
um
yeah,
yeah, and that we want, because we want to build like family, like a community of individuals that work alongside us. All right. And then
yeah,
we also set expectations of returns too, right? Hey, look, we may be targeting, 10 to 15% a year. All right. Because we're doing a more conservative end. Like, you know what? That's our target. Hey, we're gonna be try to be in alignment with that. We're gonna keep you updated along the way. So you can make sure you can understand how your money's growing with us. And the biggest thing is about consistency too, right? We want to have a consistent track record. So it's like a no-brainer. It's like, oh yeah, it's
yeah,
no-brainer. Of course I invest with
yeah.
these guys. Right.
Yeah,
So
exactly. Yeah, I think that's important as well. Being consistent, being transparent. Always communicating with investors. I think that's pretty important right now, especially with the financial landscape that we are in right now. I think
mhm,
consistency and communication, connectivity. I think it's very important. That's
for
what
sure.
a lot of funds are. I mean, I won't say a lot of funds, but I'd say a lot of individuals when they go on to launching funds, they kind of lack that, because they always focus on. I mean, they have solid thesis, solid products, solid investments, but the human aspect goes off of it. I think that's where the idea of connecting with people, your expertise could be very well onto the product, the investment, the fundamentals, the thesis. But if you don't have a people person, you're not gonna have a solid fund. I think the people is very important, and I saw that. I like that as well, and I saw that okay, people are more important than the money that comes in. Because if they don't understand, they don't feel connected to the fund, they don't feel the transparency, the actually the frankness to talk to the fund manager. Because if you're not being able to connect with them, that's where you're gonna lack of your funds are not gonna perform well. It's just that connectivity with people. I think is very important. So
Right,
I,
right,
I,
right.
I've seen that time and time again where they're so good with the investments, they're so good with the returns, so good with the thesis, but they lack the people skills, they lack the connectivity. And yeah, it just right now I mean back then probably could get away with it where we have this big hedge funds where they trillions and trillions of dollars of assets and they just manage it very quietly. There's no transparency. There's a lot of behind the work scenes that goes on. I think you can go. I mean, you can get off with that back then, but now with this whole digital space, this the genuinity needs to be, the integrity needs to be there as well. Yeah,
Yeah, yeah, and I totally agree, but that's why also it's an opportunity there, right?
yeah,
Because the big firms, their basis has been on, non-transparency, right?
exactly.
Lack of communication. So it's hard to change an entire culture overnight. But that gives
True.
also birth to individuals such as us, right? Who we're dealing with these new age investors. where they're used to having, access to information at their fingertips. They're being
Exactly.
bombarded constantly with, well, I can get you more, I can get you this, I can get you that.
Yeah. Yeah.
Well, how do you
Exactly.
make them sticky, right? You have to, have different elements outside of just the returns that make these investors sticky as well to,
Right.
make them want to stay with you.
Right. Right. Okay. Perfect. Perfect. I think that's a good way to break that down as well. Mm, on the topic of funds right now, what would be what do you suggest the are you going on the accredited investor line? As what you said, you're opening up for people who don't qualify for the funds as well, right? So that's, I bet that's working with the GP, right?
Mhm.
But why aren't you or would you consider running it more onto like a anyone can qualify? What I'm trying to say is, um, is there a benchmark that you would not adhere to? That means if they are not below this much, they will not qualify. Is there a certain benchmark that you kind of set for your funds?
Oh yeah, for sure, for sure. So of course, because we're in the commodities market and everything, and we're regulated,
Yeah,
you have to be a QEP in order
yeah,
to come into our actual fund itself.
mm,
Since we actually were just approved for the fund in January of this year,
right.
we
Congrats to you. Congrats to you.
yeah, thanks, thanks. So we're at $250,000. You
All
have to
right,
be a QEP to come directly into the actual fund.
right,
Um, However, outside of that, we have opportunities for everyone else, everyday working people too, as
right.
well. And like you had said, via our GP or what's called our general
General
partnership.
partner, yeah.
And so, therefore, we let people know, like, hey, you know what? Whatever's good for our fund to invest in is also good for our general partner to invest in as well. And
Right,
so, we
right,
let people know, like, hey, we invest as a general partner alongside our fund as well. And so therefore, we allow people to come into our general partnership to be able to invest at varying numbers. So we have it from either you have $100,000 minimum, and then we have another option where pretty much we start at $2,500. So imagine at $2,500, we can at least give you a set rate of return that we provide for individuals.
right, right. I think that's amazing because you're working off the as an open-ended fund and you're constantly raising capital. I think that's a very smart way to go in raising capital as well. I'm also on the process of just identifying and working down the numbers for that as well. Yeah.
Yeah, and
So
so of course we have bigger plans, but we're trying to excuse me. We have bigger plans, but of course, we want to make sure that we're growing and scaling properly so we can serve the people we initially wanted to serve. Right?
right, yeah,
'Cause it can be easy, once you spread the word and we have a consistent track record, which we do have for the past 3 years,
right,
that all this institutional money just starts pouring in.
yeah.
But we want to make sure that we're not losing sight of why we're doing
Mm,
this,
yeah, exactly.
right? Because
Who we're
that
doing it
money,
for, like who we're doing it for. I think it's more
mhm,
important. Yeah,
that money's
because
going to be there. They're just
yeah,
like, hey, here's the money. Go ahead, because that's what they're used to doing, right?
yeah,
So they're
yeah,
gonna allocate us 2,000,000, 3,000,000, 10,
yeah,
15, eighty
exactly.
million over here. We've already earmarked all of that, right? But we're saying like, hey, you know what? We're trying to make sure we got our foundation correct so we can communicate and be a part of the communities that we want to be a part of to expose them to the
To this
world
world of funds,
of
yeah,
hedge
yeah,
funds
fine,
and
hedge
alternative
funds.
investments.
Exactly. Yeah, I think that's super. That's well put actually. Yeah, because once the thesis and the track record is built for a certain fund, you can get institutional money pumping in, and they have resources where they are able to allocate funds very quickly and very immediately. But then we're not able to serve the people that we wanted to serve, or the people that really we want to help. And even though it might take a bit more time to educate them and stuff, but once they have access and they are able to see this world of funds, they are then having the access to this tool where they can invest their money in a better way. And we're just
Exactly.
we're just we're just lucky to be in a position where we can give them that tool, so
Yeah. Yeah. And I think it's a superpower too, right? It's a
yeah,
superpower.
exactly, yeah,
That also brings in more money though, right? So think about it as this here. It's like quality introductions.
yeah.
At the end of the day, it comes down to people.
How's your funds payout rate? Are you guys paying out, or you guys can, or is it all based on liquidation or returns per quarter basis or yearly basis? How are you guys working on your fund structure?
Yeah. So we actually have it where we have liquidity, right? So if
Right,
you need, then you can let us know.
right,
So, like I said, we're open ended in full totality. So
right, right,
therefore, it's like, hey, you know what? Give us 30-day notice. That's our minimum. Now, of
Right.
course, in our fund, there is a 6-month lockup period, but after that 6-month lockup period, all right, you could take your full principal if you so wanted, but we have to have a 30-day notice. Now, if you just want to
Mhm.
take some redemptions, or for everyone listening, just want to take out some money, right? We do have some limitations in place, right, to maintain our
Right.
fund structure. So
Yeah.
we'll say, hey, you can only take out a maximum of 8%, you get what I'm saying, of your total AUM that you have with
All
us
right.
in a
Right.
given
Right.
month,
In a given month.
right?
Right. Perfect. Yeah.
And so therefore it still maintains our structure, our numbers and
Yeah.
everything too. But that's
Yeah.
again, that comes back to us saying we have a gift. We have a great
Yeah.
product. We wanted to make sure like how many unique points of value can we implement within our fund that still makes us profitable, but also makes us sustainable
Yeah.
and still gives opportunity to grow. And so we decide we identify those little nuances, right, that we can
Right.
implement that still gives transparency, still gives value, and also differentiates us in the marketplace.
Right, right, exactly. I think that's well put. Yeah, because if you're able to do it sustainably, give them the returns, do it sustainably, the growth is just exponential because people are going to be coming in, they're going to be having a good time with the fund structure and stuff, and we're not compromising the structure of the funds, and we're able to keep by the returns, and the product is sustainable to see growth in the future. Yeah,
Correct, correct. And but
yeah,
what you also do too is like again with that constant communication and that community
yeah,
you've built with those investors, hey, you're letting them know like it's more advantageous for them to keep going, right?
right,
It's more
yeah,
advantageous to not take
yeah,
because when you're doing your due diligence as well, you're letting them know like, do you even qualify? Right? Let's do
yeah,
this here because many people want to invest, but they're not ready. All right. So like,
exactly,
hey,
yeah,
you know
yeah,
what? This money that you hear, what is it earmarked for extra, right? Do you have any
yeah,
type of emergency fund sometimes, right? Just doing your, of course, regular due diligence to make sure they're ready to be in the fund. And we even told people that said, hey, I got 50 grand right now. And I was like, okay, let's go ahead and put that towards your emergency fund. And let's just go ahead and build some muscle with saving. Not yet. And
right,
after a while, once they learn it, like they appreciate that we didn't take their money.